When you look at financial statements, you will see that you are provided with current year results as well as the prior year results. Now, why are the prior year results provided? This is so that you can be able to compare this year and last year or previous years. Now, that helps you as a user identify any trends or changes. So, I have an example here of financial statements. These are by car sales, or these are from car sales group. You can see that we've been provided with 2023 figures and the prior year figures. Now, if you look at this, if we take an example of revenue, you can see that revenue in the prior year was 509 million. And in the current year, it's 781 million. Now, this is very useful to say a new investor, because if prior year was not provided and you are only provided with the current year, there is no way of telling whether this company is growing, whether it's declining in revenue, whether it's stagnant, and the like. It is the prior year figures that enable you to actually be able to analyze them, see whether there is a trend or change. Now, this obviously, if you are a new investor, you probably will be happy with this company because you can see quite a significant growth there. If we look at earnings before interest, taxes, depreciation, and amortization, you can see also quite a significant leap from 268 million to 400 million. Now, let's look at profit for the year. Now, that was 161 million, and it seems that there is a quantum leap, $648 million. I'm sure right now you're probably analyzing that even as I speak. How come there's been such a significant jump in profit from 2022 to 2023? And if you've done your analysis correctly, you've probably gone through these figures here, comparing them with last year, and then realized that there is a big abnormal figure. There was nothing in the prior year. So if we look at this figure, we can see that this is actually net gain on step acquisition of associates. So that will probably not thrill a new investor very much because it's a one-off item. You don't expect that to happen every year. That's the use of comparative financial information. So what is comparative financial information? It's all information relating to the prior year. So what we are saying here is amounts and disclosures included in the financial statements in respect of one or more prior periods. Now, just remember that even with car sales, even though we looked at just the prior year, if you read the financials, you might see prior years later than just last year. So all that is considered to be comparative financial information. So how do you deal with it as an auditor? That depends on the framework that you are looking at. For example, IFRS will have certain requirements when you're dealing with comparative financial. Now, there are two different types of comparative financial information. The first one is corresponding figures. Corresponding figures, if I can explain, these are figures that relate to the prior year, but they are very integral to understanding this year's figure. And so it's impossible to understand this year's figure without considering the opening balance or considering the prior year figure. So that's what we call corresponding figures. And so in the financial statement, when an item is a corresponding figure, it's integral to the current period financial statement. If you don't include it, users will not understand that, as an example. So it's read in relation to amounts and disclosures relating to the current period, so very integral. And the auditor's opinion does not refer to corresponding figures. So if you've been asked to audit this year's financial statements and you have corresponding figures, you're not going to mention in your audit opinion the difference between this year's figures and the corresponding figure. It's all seen as one. And so it will be included in the audit opinion. So what we are saying, the opinion relates to financial statements as a whole, including the corresponding figure. I'll explain this in more detail. Now, if it's audited by a predecessor auditor, for example, if this year was audited by Grant Thornton and the prior year was audited by KPMG, Grant Thornton can actually mention that KPMG audited the corresponding figure, if the law permits. Very important to consider the law in your jurisdiction permits. If it does, Grant Thornton can say, yes, KPMG audited. They can say the type of opinion that was issued, and if it was qualified, reasons why that was modified, and the date, obviously, that report. Now, then we have what we call comparative financial statements. Now, these are last year's or prior year figures, not just last year, but prior year figures that are put there mostly just for comparison's sake. They are not integral to understanding this year's financial statements, or rather this year's results. But they are applied or included in the financial statements so that you can be able to compare. So they're not that integral. Even if they were not there, you could be able to look at the financials and go, yep, I somehow get what's happening. So, like I said, it's comparable to the current period, and the auditor's opinion can refer to those financial statements. Now here, what I'm referring to is sometimes you might be asked as an auditor to audit financial statements and the prior year figures were not potentially audited. So you have this current year and you have prior year. And so it's important to mention them in the financial results, that year and the prior years and the prior years. So what we are saying, opinion relates to each period presented in the financial statements. And by the way, it can differ between periods. You might have a modified opinion in the prior year, but this year you might decide to provide a clean bill of health and an unmodified opinion. So very important to understand how comparative financial statements are different to corresponding figures. So let me take you through this. So we looked at sales. Say, for example, with car sales, revenue from contracts with customers in the prior year was 509 and in the current year was 781. I'm saying this is comparative financial statements. Why? This figure has no bearing to this figure. They're not linked. This doesn't affect that. So this may be a bad year for car sales. This was a great year for car sales. These sales relate to last year. These sales relate to this. Very different transactions. So that's corresponding financial statements. Don't need these figures to understand 781 to 30 million. Now let's look at, and that relates to all this. All these figures here, you really don't need. You can see finance income. Who cares whether last year was 477, this year was 8103? No relationship, except for comparison's sake. You can go, looks like the bank charged more. Why? In terms of interest. So you can do that. But when it comes to understanding this year's figure, that has very little bearing to it. What about this disclosure when it comes to property, plant, and equipment? So in this disclosure, you are told this year we had assets worth 7.115 million. You want to understand what that is constituted of. You can see it's impossible to understand that figure unless you also look at the opening balance of P, P, and E, which is 3409. So for you to understand 7115, you also have to understand 3409. And so that figure is actually a corresponding figure. It's very important for you to consider it. Now, when I was working with KPMG and EY, what would happen is if we had such a disclosure, it didn't matter if we were not the auditors last year. So if we were not the auditors last year, we still needed to make sure that this figure is actually correct. So we potentially would do extra work. I remember, for example, being at KPMG Australia, and I remember very well us visiting another auditor to understand the prior year figures and requiring that auditor provide us with additional information like schedules and all that, just to understand this particular figure. We also talked to the client as well. So we compared the audit working papers of the other auditor with the financial statements of the client. Now just remember, when you go to the other auditor, so for example, if it was, I was working for KPMG Australia, if the other auditor was, say, EY, we wouldn't take their files, but we could visit them and go through the file, scan through the files, just to understand what that figure is. And most of the time, it will be areas where we are really concerned about, just to get. Now, that auditor can say no, but most of the time, if it is done properly, they have no reasons to say no, provided you don't take copies and the like. It's just for you to try and understand how they actually approach that particular figure. That's what corresponding figures are. I want you to really understand that. Now, that is integral. So I have a quiz here for you. I want to see whether you understand this. The prior year financial statements and consequently the opening balances in the current year period were not audited. What should the auditor do? So you've been provided with financial statements, prior year was not audited, and you are looking at this. What should you do as an auditor? Number one, require the organization to have prior year financial statements audited before given to you. B, obtain sufficient audit evidence that prior year closing balances are free of material misstatements. And C, issue a disclaimer of opinion relating to the prior year figures. A disclaimer is simply saying, I didn't audit them, so I can't give an opinion about last year's figure. So which one of these is correct? Now, obviously, the correct answer there is obtain sufficient audit evidence that prior year closing balances are free of material statements. So finally, I have examples here, or an example here that really explains to you how you deal with comparative information or comparative financial information when it comes to the disclosures that you include, or rather the paragraphs that an auditor has in the auditor's report. So you can see this is a company called ABC Company. The auditor has provided an opinion. It's a clean bill of health. The auditor is saying that we have audited, and in our opinion, the financial statements present fairly in all material respects. Good and modified opinion. Now you can see here under other matter paragraph, the auditor has said the financial statements of the company for the year ended 20x0 were audited by another auditor who expressed an modified opinion. So that's ideally how you can, again, utilize the other matter paragraph. So when you're talking about comparative information, you can actually include that, or you should include that other matter paragraph, especially if you are not the auditor prior year. So I'm hoping with that you have a very good understanding of comparative financial information, how to deal with it in the audit report, and how to audit. Thank you.